Greetings everyone, welcome aboard. Happy Monday to you guys. March 21st, 2011. One of those Monday mornings when I wish I could turn back the clock. We had such great sports this weekend, right? We had tennis finals. We had March Madness, right? Great weekend. Until the power kicked out yesterday. We had rain, cats and dogs here in Los Angeles for the weekend. Saturday was just fine. In fact, spent Saturday getting a lot of work done. And then Sunday, of course, lost power Sunday, never got any power all day Sunday, so I was worried this morning may be a tough day for me here without any power, but we got power late last night. I'll be checking emails this morning here, kind of getting caught up from what I missed on Sunday. But welcome aboard though, right? Monday morning. Now this is the Monday after OPEX, right? So what happened today? Monday after OPEX. Now don't forget, last week, quadruple witching. Big challenge last week, right? Glad we made it through last week, but we're not done yet. We've got another week and a half here going into the end of the first quarter. Now remember, why is the first quarter so important? Major money managers, professional traders are padding their accounts into the end of the first quarter, hoping that they can then impress their bosses, right? And their bosses can impress their clients. So this time of year, you've got daylight savings time, spring break, end of the first quarter. You've got quadruple witching last week, right? There's a lot of reasons, right, why things aren't kind of lining up here at the end of March. The biggest thing, though, is that you've got distractions. Here in the U.S., you've got spring break. So kids are away from school, which means their parents are running them around town, going on vacations. So for the most part, any traders that have children, right, they're distracted this week. Then you've got last week was quadruple witching. We had the earthquake a week and a half ago. So you can imagine, guys, this time of year, combine that with the simple fact that traders are trying to pad their numbers. See, traders aren't getting into any new positions right now. They're trying to unwind their positions. Last week, it was because of OPEX. This week, it's because they're trying to pad those numbers so they can press their clients end of the first quarter. So we know end of March, end of first quarter, tough time of year. Monday mornings, the same reason why you and I, right, we want to go back to sleep on a Monday morning is the same reason why we have sluggish markets any Monday, right? Whatever Monday you watch, you're usually going to see some sluggish price action on Monday morning because of the same reason why you and I, right, would rather hit that snooze button, right, than to get up early in the morning and be a day trader. Now, what we did have going for us, though, today, even though we did have some pretty slow price action at the beginning, we played that game, right? What if price rises? What if price falls, right? We did this morning at 8:30. And I posted this on the blog for you guys. We gave it to you guys in the morning prep this morning. We posted it in the trade room this morning. I'm sorry, I didn't put it on the blog, but posted it for the guests and the members in the room this morning. So this morning at about 8:30 this morning, we played that very popular game, which was, it's very slow right now, and like I always say, when it's really slow, that's the best time to get ready for when it's really fast. So we saw 8:30 news. We had the Fed activity index 8:30 this morning. Didn't expect to see much out of it, but when we didn't see good volume, we then knew, let's plan ahead, right? Let's plan for what's coming up today. And we said, guys, here we are, right? If crude rises up, where will we buy? Where will we sell? But we also said, what if crude falls? If crude falls, then where will we buy? Where will we sell? We went through that very simple exercise, and we found places like 103, 103.25, 102.88, right? We found 104, 104.13, 104.21. So we began listing off all of these areas of resistance overhead and these areas of support below where we wanted to be buying. And we talked about that live in real time at 8:30. And then wouldn't you know it, now I know it was pretty slow, but wouldn't you know it, after we finished up that very simple exercise, price begins to drop. Perfect. Now, we didn't know whether crude would rise or fall, but we knew it was going to happen sometime, and we better be ready for it. So crude drops. Now, what happened was we had a sideways range on crude. Now, we talked about this again this morning, but what are we always looking for on a sideways range? Buy the lows, sell the highs. But what if we break out below a sideways range? You better believe I'm going to buy that next support, which happened to be the previous low of day, and then once we come back up, I'm going to buy the break back into that sideways range, and that's where we made our money on the first two trades today. So price dropped out of the sideways range. We were waiting for it to buy that 103. It broke right through the 103. We had 102.88. Remember that? Remember this morning, guys? and we bought the 102.88. That was the first trade. We then came back up above the 103.25. That was that sideways range. We bought it again. And there were two trades that we identified well in advance. All we had to do was wait for price to come to us. Then finally, we noticed we had a bearish channel, right, with a bullish channel, right, that we're intercepting here on crude this morning. And it was actually a great exercise, a great example of how we read tape and we look for the market to give us clues. Well, this morning, our last trade here, 10:30, right, 10:30 was at the 103. What happened at the 103 was we had the lows of a channel, right, the highs or the lows of two channels, and we had to make a decision, were we going to be rising with the bullish channel or would we be falling with the bearish channel? And so what we did was we read tape at 103. Remember what happened? We saw buyers, and then nothing. Second time around, above 103, buyers, and then nothing. So we watched this morning, we read tape, we read speed, we read momentum, and we said, guys, if we get above 103 here, we're going to be right in the lower end of that channel. I want to buy this channel. Never happened, though. We read tape 3 times, nothing happened. That told us, remember, sometimes the best feedback is going to be negative feedback. So, or the best feedback is no feedback at all, right? In this case, we didn't see any big buyers above the 103. We were waiting for them, didn't see it. That gave me feedback now, no buyers to be found. Now let's see if we're going to sell off here, and that's exactly what happened, so we took the short below 103. Now, kind of the frustrating part about what happened this morning was that we nailed those first 3-4 trades. Really easy. But what happened was, once we got down to the area for those trades, we couldn't quite get us into a fast track. Now remember, the fast track method, the pattern's got to be perfect. I've got to have my rules really lining up. And the big thing today that kept us out of the fast track was the inconsistent speed. That was by far the most difficult thing today for us on crude. Now, on the advanced method, we can use speed, tape reading, size, momentum. We can use compensating factors to get into this trade. So we said we're going to buy the 103. We didn't buy the 103. We ended up selling the 103. I took it as an advanced method because we had compensating factors. We had just saw the lack of confidence, the high side, so we sold. Unfortunately, those compensating factors really aren't enough for me to take a fast track. They definitely help. Right now, what would be nice is if I saw compensating factors and had the fast track that could qualify, but that didn't happen today.